But Blue Star is the company on our radar. Phillip Capital put out a very interesting note. They initiated a buy. They spoke about a target price of 14.51 on Blue Star, which is a big upside. Their key thesis of a buy is that they expect a revenue growth of 17% over the next 3 years, and this will be led by market share gains across segments for Blue Star. So let's speak to the management. We are joined by Thiagarajan, the MD at Blue Star. Mr. Thiagarajan, good morning and happy Diwali to you in advance. Hope this is a better one than the preceding couple because we've had very challenging times. But do you concur with this view that an analyst has put out that Blue Star is expanding its presence and hence gaining market share across categories, and that could perhaps help you to do at least a 17% compounded growth in revenues over the next 3 years? Is that a doable target?
Good morning, Sonia. Happy Diwali to you and your colleagues and audience. It's a pleasure to talk to you. Indeed, it is a very bright and exciting Diwali season. I will not be able to comment on the valuations or something that is entirely up to the market to decide, analysts to predict. The growth prospects are immense. In that respect, I think that growth that is indicated there, we may even exceed that. It is probable. I am saying this because of the room air conditioner segment, the penetration, what is there today, it is rapidly going to increase. That I would expect the penetration from the current level of 7 to reach up to 10%. Then the India market, if you recollect from 2003 onwards, air conditioners consumption started moving up, and many units are coming for replacement. Today, the replacement market is negligible. And I think close to around 1.5 million units will be coming up every year, and you can see it will rapidly grow. In about 3 years' time, around 10 to 15 million will be replacement market alone. So there is the other part of it. The third is the infrastructure push, whether it is a metro railway or airports or the other social infrastructure that are to be built. Like you are looking at hospitals. We need quite a few hospitals. We need even hotels and convention centers. So I am seeing great growth happening there. And the manufacturing capacity expansion cycle. So the manufacturing sector has opened up huge opportunity. Data center is a big growth story. Now come to commercial refrigeration. We are not even at 1% of what this country needs. And the ice cream, processed food consumption, whether it is fruits, vegetables, other perishables, and the export opportunities that are being pursued by the processors, that is opening up a great opportunity. In fact, CAGR of 17% should be doable, and in fact, it can even be exceeded.
Okay, all right. All right, Mr. Thiagarajan, got that. And wishing you a happy Diwali. Your initial comments suggested that it's been a good start to the season. Though for you it's off season, but I think you're comparing it on relative terms. I wanted to ask you about inventory in the system. Some reports indicate that the old BEE rated, inventory is rather high in the system. Could you confirm or deny that, and your sense on the inventory situation for the industry?
I think that will not be much at all, because the energy label change took place in July. And if you recollect, summer started off very well. March, April, and May first half showing a phenomenal growth, but it tapered off. Therefore, there could be some inventory, but I don't think post-Diwali, the old energy label products will be existing in the system at all. But the truth is that the inventory level overall, including the raw material and components, would have substantially gone up because of the supply chain disruptions and what we need to plan for the season ahead. So we are all, if it is 45-day inventory, we are ending up holding around 75 to 80 days worth of inventory. So therefore, raw material components inventory is of very high order. The only item that may not be stored that much may be metals, because the metals you see the downward trend. Otherwise, quite a few components, including semiconductors, are being ordered in advance for mitigating the supply chain risks.
Okay. All right, Mr. Thiagarajan, so you're not too worried about the old BEE, that's the energy efficiency rated, inventory. You're saying that's likely to settle down. What about the new BE rated, pricing? How much is it higher? Has it been pushed through?
No, the price increase has not taken place from July 1 at all. Because if you recollect, there was benefit coming out of the commodity prices softening, and then off late you are seeing the rupee depreciation. In effect, there may not be any change in terms of savings or in terms of hiking. So there is no price change that has been implemented. My sense is that all the players will review the prices somewhere around February, building up to the season. That's what will take place.
So, Mr. Thiagarajan, how is this quarter? How is the quarter going to be? How is this the third quarter, in your assessment, going to pan out as compared to pre-COVID levels? I mean, could you give us some indication? Where are we at compared to pre-COVID levels, both for room air conditioners and the commercial segment?
The commercial segment, B2B, will be doing phenomenally well because there is a huge rush for executing the projects. Manufacturing, infra, data center, there is great speed with which these projects are being executed. Room air conditioners, I think it will be at the pre-COVID level. In any case, it is a very, very lean season. As I told you earlier, that 15% of the revenue of room air conditioners should be coming in this particular quarter. The real pickup should be from January onwards. So I don't see a demand drop. I do not see a huge boom taking place in that segment, but B2B part of it will be a huge rush to get the projects executed.
Home AC segment particularly, you said that penetration is quite low now, it's 7%, it's expected to go up to 10%. What is your own market share currently and how much do you think it can grow by? And also trying to understand whether there's any operating leverage that you can eke out. When do you expect your margin, because margins are still at, low single digit. When do you expect it to get to perhaps high single digit or even double digit margins?
It will come out of scale. So we have to grow faster than the market. We have stated this, that we would like to be at 15% market share from the current level of 13% by FY25. That is the goal. So for the coming years also, we will maintain that growing faster than the market. The second part is repositioning the product and making the product affordable. And this work is through investments in R&D. Substantial investment is going on there. So we have done it well last financial year. We have been doing it well this year. We will continue to do so. The third one, operating leverage, apart from scale, I think it will be through the commissioning of the Sri City facility. There, the southern market, you have got some logistic savings, both in terms of incoming raw material as well as outbound. I had again disclosed this to your own channel that there may be a benefit of around 4% to 5% through logistics alone, because all the 6 states in the south can be served overnight. Today, we are dispatching it from Himachal Pradesh to serve the southern states, actually. The next one, I had pointed out again last time, the advertising expenses as a percentage of the revenue has been coming down dramatically because the scale is being built and there is reasonable awareness on air conditioners and that digital medium is being leveraged adequately. So I think there is a leverage of at least 1% of the revenue in terms of advertising expenses.
Okay, so what does this mean for overall margins? I mean, you said 15% market share by FY25. You said 17% plus compounded growth in revenues over the next 3 years. But on the market share, on the margins, any target that you'd have?
We have maintained always. We will be very happy if EBIT margin of around 10% is maintained. We have done it in the past. We have done it in Q4 always, or the summer season. So that's what we will look at it. This year, summer, you had a difficult time because of the unprecedented commodity price hike. So if we would get back to 10% EBIT margin in the long run, we would be very happy. That's what we are working towards.